Welcome back, and joining us on the show now is Ole Hansen. He's head commodity strategy at SaxoBank. Ole, hi, good to have you. It's festive time in India and a very keen eye on gold is what we seem to be keeping right now. So with almost $2,000 an ounce done and this heavy correction that we've seen in the last week or so, how are you reading this? I mean, it's positive for Indians who want to buy gold, but how are the prices expected to move from here?
Well, happy Diwali to all of you. Gold is right now is consolidating, following that very strong rally we had since the middle or the start of October. So I think it's quite natural that we're just taking a bit of a pause here, and it basically means that it's been struggling to react to the data coming in, both or the reactions or market movements in yields and the dollar just recently. So, but I think it's just a market that needs to consolidate, perhaps. A bit lower than 1950, but generally I think the Fed are talking tough. Fed speakers are still talking tough, but they have to, because if they start to talk about rate cuts now, then obviously the market will price that in straight away. So they have to talk tough for now. We believe that we have seen a peak in US rates, and that will eventually filter through to even higher gold prices next year.
Ole, I mean, we've spoken to you earlier and you've been bullish on gold. 2100 or around thereabout is what you've said we could see next year. Is there any change or a revision on those targets?
Well, the target's always difficult, Manisha. And when you see a move like the one we had within the last month, then obviously anything can happen. A $200 move in gold is not happening that often, but when they do happen, when we get momentum, it can go fairly quickly. So 2100 is probably a bit conservative, I think, at this point, based on the assumption that rates will come down quite significantly next year. We will have a period of slowdown in growth, and that will underpin prices.
Ole, how are you also looking at the silver prices? Because yet another year of deficit, but here as well, with the way the industrial metals seem to be behaving, there is this constant pressure that we've seen in silver.
Silver, yes, and platinum as well, and that's quite typical when gold really takes off. The other metals struggle to keep up, and what we have seen so far is that there hasn't been any follow through to silver prices, and that just also indicate that we may just have to pause a little bit here for now. Silver is being challenged by what has also been supporting gold, namely the fact that we are seeing an economic slowdown, and that's obviously not good for silver given its industrious use. We're seeing the same in platinum, where the discount to gold almost reached record levels recently before recovering a bit. So silver at this point in time is struggling a little bit here, close to a 1 month low, and we need to see that we need to see silver step up as well for gold really to move higher. But in the short term, challenged by the economic outlook, which is showing some weakness, also after the data we had from China yesterday.
Ole, how would you look at the crude oil prices? I mean, big headlines coming in for this one. We did see a 10% decline in October. November has started on weaker note as well. We're down almost by 7% in the month of November till time. What is it in sense of fundamentals that you would want to watch, and any price sense?
Well, fundamentals the focus has changed quite significantly from the OPEC-led tightness in supply through keeping production down, now to the demand outlook, which is challenged once again, or at least showing signs of being challenged. And that's led to this big turnaround in positioning. There's been quite aggressive selling now for the past couple of weeks, but still not a lot compared to the massive amount of length that was added into the market in the prior months, in the belief that Saudi Arabia would underpin prices and drive it up towards 100. That has obviously failed. And that basically means in the short term, there is a risk we could overshoot to the downside, basically meaning that Brent could drop below 80. But I think that's probably a level which is not justified by current supply and demand balances.
So could we see 75 then in coming days? I mean, do you see that much of correction, bearishness?
Well, that should only be if the market really starts to put a red flag to the bulls, to the bull, and the bull in this case being Saudi Arabia, basically forcing their hands and forcing a comment or reaction from them. But otherwise, I would think that we are getting close to levels where it will not really be justified to see it much lower. But we know oil prices. We were talking about $100 just a month ago. Now market will probably start to talk about 75. So we may have an attempt to get to that level. But then again, I think that would be an overshoot to the downside.
Oh, well, yes. Ole, thank you so much for joining us and making sense of all that's happening in commodity space, especially the important ones there. But with that, we'll go for a short break. We will get you more on markets and stock-specific action on the other side.